crypto continues to bleed. Equities are running out of steam. We're going to be discussing that, the WWE Netflix agreement, which is just totally awesome. We'll get into a little bit of wrestling talk too, and much more today. Money Never Sleeps. Thank you for joining us today again, everybody. Before we get going, do us a favor. You know the drill. Hit that like button. If you're new to the show, subscribe. It would mean a lot. Nothing Kevin or I say is financial advice. So please do your own research before making any buys or sells. Kev, woke up this morning to see Bitcoin below 39K. It was, down around the 38.3, 38.4 level. It's since bounced back a little bit, just over 39. The TradFi markets are pretty boring overall. We're seeing not a lot of movement there within, 0.25% up or down, give or take. And, we have earnings coming up. What is your main focus right now? Because it is feels like a point where like the bullishness is running out of steam. People are trying to find reasons to be bullish, and they're kind of slowly running out of them.
Yeah, I mean, I think we did a good job yesterday talking about crypto and how it's important to be following that price action right here, because we do think that if things do line up, there's a good chance we could see a correction for the S&P. They seem to be correlated. History has shown that they are a bit correlated. I won't get into China just yet, but I think the important thing that's happening right now, and I talked to you about this before the show, is that the top 7 are once again leading the entire market, keeping the indexes up on the day, right? You can see that some stocks are red today. However, we're still up in the S&P and the NASDAQ primarily because for the most part, the top 7 are doing fairly well. They're at least green, or if they are down, it's barely anything, right? I think the only one that's down right now is NVIDIA, and it's by 74 cents or something like
1%?
that. So
yeah, it's nothing.
Yeah, it's nothing. It's not going to make it or break it either way. But those are the ones that are holding the most amount of weight in the S&P, the ones that are holding the most amount of weight in the NASDAQ. Now, the interesting thing here is these market caps are so insane, right? And there's a really good video last night about Jeff Snyder. We always talk about him, Ueda University, talking about liquidity, collateral. And we even talked about this, I think, 2 months ago when we were mentioning clearinghouses and how they're worried. So the way it works is when you buy and sell a stock, it has to go through a market maker willing to, pretty much put up the liquidity to buy a stock or sell it and make sure that there's enough money that also goes out. However, with these stocks being so highly valued right here, the market cap just being absolutely insane, over trillions of dollars, it makes it really hard for them to be liquid in times of, panic and, stress. Now we're seeing that a lot of these smaller stocks aren't necessarily as concerning because they can hold the right amount of percentage to pretty much equal out the liquidity of whatever the market cap is. However, as you start getting into these NVIDIAs, these Apples, Microsoft, Meta, any of these that have massive market caps, well, they can't necessarily or even feasibly just have that much capital set aside for them because they have to worry about the rest of the market as well. So there's a lower percentage of how much they're actually holding in order to make sure that these transactions are able to go through when you buy and sell these stocks. Say that any of the big tech stocks get really bad earnings and they start selling off. Well, because they're not 100% equal to whatever the market cap is, you're going to see a sell-off, and there's a good chance that those start to deep peg to the point where it's falling faster than people would probably anticipate. And it probably would happen more with those because those are the ones where everyone is piled into, going to be the ones that everyone's going to try and get out of if the price does move. But we're not going to necessarily see the price move as drastic in maybe even some of these smaller caps. You'll probably see it a lot more with these bigger, tech stocks, where that could absolutely just drag the indexes down. So that's something that's really important here as we're seeing how overweight these stocks are, how much the indexes actually are hold of these. The weight in the S&P is absolutely insane right now for Apple and a couple of these other companies. So it's really interesting to see that. And as we get into earnings season, I think there is going to be probably a bit more of a bad outlook across the board. I said it yesterday on Twitter too. I think that cost-saving job cuts are going to be kind of a theme that we're seeing across the board. And that could lead to, maybe some negative price action. If that happens and we get enough volatility spike, a good chance that we could see the price of these move a little bit faster, a little bit harsher than we probably anticipate some of the other smaller caps in the market. So I think that's something that's really important we need to be keeping an eye on, especially with how overweight everything is, because all it takes is one bad news story, one data set. Someone wants to build an Apple car and push it back 2 years from 2026 to 2028. And then next thing you know, it's like, oh, that's kind of bearish news. We're not going to see that for a while. So just something to keep in mind. I think that's where my mind is right now with the market.
Yeah, it's a big earnings week. We talked about it yesterday. We're going to have Tesla tomorrow, I believe, Netflix today. And to get ahead of what I think are going to be not great earnings, Netflix dropped news that they have reached an agreement with the WWE and TKO Entertainment to be the exclusive streamer of Raw beginning January of 2025. So we got a year to go. When I saw this news, I was like, okay, cool. What are you guys trying to get ahead of? Like, what are you going to be coming out in your earning? You know, it's not a coincidence that you announced this the morning of your earnings coming out. Like, I just don't believe that to be a coincidence at all. This is absolutely getting ahead of what I think are going to be, you know, less user growth, maybe more cancellations than they were anticipating. We saw, you know, I want to pull up the hourly on Netflix to kind of see what reaction the market's had to this. And, you know, there's a bit of a move up this morning and things started to have, you know, we saw a big dip to start the day. And then we've seen it like slowly try to get back up to where it is currently. And now it's up about, you know, 0.7% on the day. But the Netflix earnings after the close will be interesting to keep an eye on. The WWE stuff doesn't really do it for me. Now, if they said that they were going to be the exclusive home to all of the pay-per-views from like the 90s and early 2000s, that would have me interested. But I can't, like, I was a wrestling fan as a kid. I can't do it anymore. Like, it's just too much. Give me the good old days of Monday Night Raw when you people getting bashed in the head with a chair and like cage matches getting thrown on thumbtacks. Like the glory days of you know, Degeneration X, all that stuff. But nevertheless, I don't think this is like a huge needle mover for Netflix. And I feel like part of the reason why it's not today was to deflect from what will be, you know, worse earnings than are anticipated.
Oh, I completely agree. And just to get this out of the way, you and me are both massive wrestling fans. I think I'm super excited this weekend for the Royal Rumble. Not a plug. I'm not going to help Peacock out at all. But I think it is a pretty good, deal. It's going to be really interesting because now you don't necessarily need to be watching Monday Night Raw from a TV. You could be anywhere in the world and be watching. So I think that's pretty cool, especially as a wrestling fan. But I think that Netflix getting ahead of this 100% is, like you said, earnings are probably to be problematic. I think that what we're going to see from their earnings might be their methods of creating new revenue, which might be increasing the price on plans, more ads, different plans that are going to be more expensive. And I don't think that's bullish at this point right here. I think there's going to be a point where it's like, all right, enough's fucking enough. I don't care if you guys got Monday Night Raw, Friday Night SmackDown is still free on basic television. So it's going to be really interesting to see how this comes out. I do think it's really cool that, I think this helped TKO out more than anything. And I also think the news of who TKO added to their board today, they added Dwayne "The Rock" Johnson. So that's pretty amazing too. You can see how much it impacted on the open. It just gapped up straight up here and now it's selling off. And now it's bouncing it back a little bit here. But I don't necessarily think this is a long-term solution to either of these two companies. I think that Netflix definitely want to get ahead of some bad earnings. We'll see how it reacts today. And I think that's kind of the reason why we're also seeing the indexes fairly strong, because we haven't had a big company report earnings yet or just have a grim outlook. I mean, we got United yesterday saying that the Boeing situation is probably going to impact the airlines this quarter. But for the most part, I think Netflix is going to be one of the first big tech companies that's going to be pushing maybe the price down a little bit, maybe taking a bit of the gas, they'll take the foot off the gas and seeing where this market is going to head into Q2. How it's going to end Q1, I should say, and then heading into Q2. But yeah, I'm not sold on this at all. And as long as Peacock still has all the WWE events, I'm still going to be bearish because Peacock and Xfinity, I fucking hate them, man. Sorry.
And oh god, you're
worst.
preaching to the choir there. All right. That's enough about wrestling for one day.
I can go on all day.
I know you can. It does seem like what's going to be the next catalyst for continued move up in the markets? Like, we've seen every drop of bullishness getting wrung out right now. But like, what is going to be the next thing? Like for crypto, I have no idea. Like the ETF shine definitely wore off in a big way, and we're seeing this huge pullback. 10,000. Like Bitcoin not too long ago was almost 50K. Now we're below 40. So we've seen a ton of movement down. But what is going to be the thing that causes a catalyst up? Like, is it the election? I don't like, because I just don't see it. Like, I
I
don't
know what
see
it
earnings.
is.
Great. What? Go ahead.
It's not a catalyst for bullish. I have a bearish
Okay.
catalyst,
Well,
but
of course
yeah. So I mean, how could it not be China? Or as Donald Trump would say, China. That was a terrible impression.
don't do
But
that.
it's I'm never gonna do it again. I promise you I won't. But it's I think that's gonna be the catalyst right now for why we might see the stock market start to pull back here. And I'm just gonna pull up this real quick. This is the new plan because China is actually somewhat concerned. I say somewhat. That's an understatement, but they are very concerned about the state of their stock market, and they're doing what they think is going to be a great measure to save it, and that's potentially $278 billion package that they're going to pretty much give to the banks to keep money onshore and pretty much keep just buying up these stocks and keep them at this key support level. Now, this is stimulus 100%. We've seen a lot of it drive in the past, I think, 6 months. I think it's close to $800 billion worth of stimulus that they've injected into their economy to keep the market up. And you and I and everyone else who has trading view can easily go to, the Hang Seng and look at the past 6 months. And we could just kind of take a look and see how throwing money at the problem sometimes isn't the answer. And we look at this now.
It's not. That's shocking.
It's sometimes it works out, but I think that there are things that are definitely keeping it from being the answer. I mean, here we are in January. Let's look back in June of 2023. There it is, right around here. Injection. You can see that it's still from, let's say, the height in June, or let's go to July. Let's go to the height in July. They're doing stimulus. I mean, you're down over 26, almost 27% at that point. It's not the answer, and the problem is people think, and again, this is kind of funny. As soon as the news announcement came out yesterday, we could see how much the Hang Seng rallied. Look at this on the hourly; it's even funnier. You can see that it got all the way down here, and then market opens, just straight up pretty much, and just once it got to that 500 points up on the day, just kind of stayed there. Sold off a little bit at the end, 2.63% up, but look, still above that historical trend line. So they're really trying to protect that right here, and that's great. No, I think that this is also a sign that things are not great in China, because the more they have to do to keep this market up, to keep this economy up for them, the more likely that it's even worse than we probably anticipate. And we know that next week, we talked about it right at the end of the show yesterday, Evergrande, they've been doing that debt restructuring. The problem is now two things. One, how are they getting this $278 billion to inject liquidity into the markets? Probably selling off U.S. debt. That's going to be an impact. That's a direct impact to the United States right then and there, right? The second thing is, okay, what was I saying? Oh man, I just lost my train of thought there. But damn,
Get it back. Get it back.
I'm trying. I'm thinking. It's not there. Regardless, when we look at China here, though, this is a problem that we're seeing across Asia, except obviously Japan's in a very different state. But oh yeah, that's what it is. The United States, our exposure to the debt is something that's really concerning. But the problem is for the equity markets. They're not pricing in the fact that there could be a potential fire sale with Evergrande and some of these other real estate firms, to the point where it's like, okay, we have a bunch of cheap assets and the market's dropping, and nothing we do is working. Just sell everything at this point. We got to make sure that we could at least give our creditors and people who have invested something back. And even if that's pennies on the dollar, it's something better than nothing. And the sooner we do it, then someone else gets screwed over, not necessarily us. At least you get more than they would necessarily get. I think that's kind of like the Mexican standoff here. Of someone's afraid to make a move, but eventually when they do make the move, it's going to be the most violent rip throughout the global economy. So I think right now, this is just a temporary fix. This is a Band-Aid of a larger problem. I think it's going to come due in February. We're going to start seeing a lot more pain in the Asian markets, not just necessarily the Hang Seng, but I think across Korea, I think also in Japan. Japan came out and said some bad news today. A lot of people didn't necessarily like it because the Nikkei absolutely reversed once they announced it. But once again, the Bank of Japan decided to do nothing. And there are central bankers that kind of are showing that in the world, the central banks do not know necessarily what they're doing. Some people are over tightening, some people are just not tightening enough. And we can see that just from this headline, BOJ signals conviction on hitting inflation goal, and hawkish tilt stands pat for now. Their goal is to hit 2%, and they're staying very adamant on it. However, the problem with this and their negative rates, it's hard to bring inflation down if right here we can see, where is it, the wages, Governor Ueda saying that wages are higher, gradually pushing up on inflation. So if you have negative rates and inflation going up and wages going up, you're not going to get to that 2%. You have to start raising rates sooner than later. But the problem is with everything that's built up in Japan right now, if they do raise rates at the current level in the equity market, it's going to absolutely crash the market. And it's going to be very similar to the 1989, 1990 bubble, which once they did start raising rates, I mean, the market dropped significantly in the Nikkei. So it's so wild how Asia is just developing, and the United States is not pricing this in one bit. Everyone's really excited about these equities. They're extremely overweight, but Asia, I think, is going to be the black swan for this market downturn. And the question is, how much pressure is this going to put on the U.S. government and the administration right now to combat and see what they can do to maybe resolve some of the issues that are going on in the globe and prevent it from some of the contagion that we're definitely going to see? Because, again, everything is interconnected. We could even see it in some of the Forex markets. The yen is going a lot higher against the dollar. That's not good. That means the yen's weakening. We also got the yuan, who's doing the same thing. You keep printing that much money, and it goes nowhere. It's going to weaken against the dollar. That's why we're seeing the DXY rally today. And then today as well, we also got news that the euro is going down. So it's a really intricate market. It's very, very interesting, but it's not something that normal everyday investors are going to be paying attention to. We're only watching the prices of the top 7. We're not keeping an eye on how much debt and how much selling off a lot of this debt in order to pay off some of it and make people whole is going to eventually just lead to an absolute bloodbath for equities.
Okay. I mean,
sorry,
we need to send you over to Asia. Like we need Kevin's Asia road tour to really get boots on the ground as far as what is happening over there.
Do you want to know what's going on in Mongolia now? I'm just kidding. I'm just fucking with you, bro.
Oh my god, how deep are you on this stuff?
Just mess with you, buddy. But yeah, right. I mean, let's go on.
Let's look at crypto. I think that's where we should wrap it up for the day. Let's look at Bitcoin, see what's happening with some of the alts, because I know that you're anticipating alts to bleed if we cannot get a bounce here from Bitcoin. So, and we've already, we've seen it begin. Solana was, everyone's darling not too long ago, and it's still doing great compared to, where it was a year ago, but down noticeably from being over $100, fairly recently. We were in that $101, $102 range as recently as the 17th of this month. And now we are, we're down close to 80, kind of fighting. It went below that for a little bit, fighting to maintain that level right now. But we'll start in Bitcoin, and then you kind of go from there as far as the other crypto tokens you want to discuss.
Absolutely, yeah. So Bitcoin, again, it's no surprise that we've seen some really negative price action for this. We are due for a bounce. I will say that. If you look at the daily stochastic RSI, it's 2.13358. It's extremely oversold at this level. We kind of filled this fair market value gap that we've had from December that just shot up all the way to 44 from 38 in a few days. We went down to it, kind of a double top, or just kind of a flat top, like a Bart Simpson pattern actually right here, which is really interesting. I think that we are probably going to see this bounce a little bit here. Again, I talked about 44, or I think it was 45 to 46K. Let's pull it back a little bit. Let's say 44.5K to the top of this range right here. If we are able to break above that, maybe we put in a new high, maybe 50K. I don't know if we get there. But again, at the same time, I think that if we are unable to break this, then we're probably going much lower. And again, I said that this was a 5-way move to the downside. So this could be just wave 1 or wave 2 bounce, shorter than people expect. And then we have a massive wave 3 that probably takes us to that Bitcoin having, around 29 to 30,000. And that's our 40% retracement. And that fills up a lot of liquidity that pretty much Tether screwed us up with on the rally from October of 2023. And again, I say Tether because I think a lot of people definitely needed to get out of the market. We get to see that from how much some of these alts, Binance and even Solana today have dumped considerably. So we'll take a look at that going forward. But I think that Bitcoin is going to either be here to see either 34K or 44.5K. If it goes to 34.5K, then we're in an even worse situation. But so it's just a matter of time to see which one we go to. I think it's more likely we see 44.5K, just so Grayscale and some of these other these crypto bigwigs that have absolutely manipulated the market. I'm just kidding. I'm not going to name any names, but you know which exchanges I'm talking about can get out of the market. And the other thing to keep an eye on is definitely any tether prints. If you see any tether prints, millions, billions, hundreds of millions or billions of dollars, more or less likely that we're going to see that 44 to 45K get hit. So that's pretty much base case right now for Bitcoin. We wait to see if we get a bounce or if we go in a little bit deeper. I think it's more likely that we get a bounce, but I'm also just being conservative here because I don't know, maybe it is worse than I think, and then we go down a lot faster than I think. I still think we're going to new lows, but we'll just keep an eye on that for the time being. ETH had a great move down today. That's disgusting, this chart. Look at how much it's just dropped in 2 days, right? It's 5% just today. But you know, we're down about roughly $300 a coin in the matter of 2 days. It's a pretty good move, guys. You don't need me to say that, but alts just absolutely bled. And the question is, why do they bleed if dominance isn't necessarily that strong right now? Liquidity, probably. I think a lot of people needed to get out of the market. The dangerous thing here is, you know, ETH could be done with its 5-way move to the upside. And, you know, that was something that we were keeping an eye on. I was saying, let's see, wave 1, wave 2, wave 3, wave 4 down here, wave 5. That's totally fine. I could see that happening and be fine with it. I thought maybe it could have been a little bit higher. But I think the confirmation of that is if we go lower than our wave 1, which would be down here somewhere. So 1860, probably going to get a bounce before then. But I think that over time, we will see in the days to come, eventually some days to weeks to come, correction where we go below that. And then we'll have our confirmation that, okay, this is the height. We went to 26 something, to maybe even 27. I can't remember the exact height. 2715, 2717, somewhere around there. And that was the height of this cycle. Our B wave is completely done, and we are going to finish off our C wave now, or at least start putting in our C wave down to the lows, which we should expect within a year, or maybe a little bit more than that, or even less than that, depending on how fast liquidity dries up in the system. So that's something that we're seeing for ETH. I'm okay with this putting in the high here. I think we could get very similar to Bitcoin results here, just smaller little bounce, and then we continue on down. Probably lining up with the halving too. You know, I was very bullish on alts there for a period of time. I definitely think that there's a chance that I could be wrong here. You know, I was saying that we have a 5-way move to the upside, wave 1, wave 2, wave 3, wave 4, and this is kind of gearing us up for a wave 5 bounce. Question is, if we go below, you know, 40 cents for something like Cardano, which is not that far away, right? It's a little bit over 10%, I think. You know, 15%, I guess. I mean, the fact that we're down 2.34% today and we bounced already off of that, we went as low as, let's see, say the difference between these is about 7.88%. If you get a couple of bad days where just the market sells off, I mean, you get below that, as long as you get a wick below that, you're not going to get you're not going to get new highs in the cycle, or at least this year. I think there's a better chance that you're going to put in a lower high, very similar to what we just talked about on ETH. You know, you can go across all these very similar patterns, but this is just a lot of downward pressure on these assets. I mean, I'm being very, I guess, not flip-floppish, but very conservative about what I'm saying here, because I think that it could get to the point where we get extremely low, but we don't break lower than this wave 1 high. And if that's the case, then we have probably a really strong move to the upside to a wave 5, and that could be dangerous. It could line up with maybe tether printing something. But I do think that if we do see another massive sell-off in the alt market, there's a good chance that we could be invalidating some big structures, and that's probably the most bear case scenario that I could present. Because if that means the structure's over, then we're probably in our C wave, and the macro, medium term to long term, you know, year or so view of alts are that they're probably going to get decimated as the market sells off. So it's going to be really interesting to see if the trend is broken. I don't think that the trend is broken just yet. I'm going to stay somewhat optimistic in saying that we're going to get one more push up higher, but I do think that it's very close. We're like razor edge thin. It can go either way to the point where maybe alt season just doesn't come this year. So I'd be very cautious right here in the crypto market. I'm not necessarily going to align myself one way or the other. I mean, even look at Solana here too. I expected this wave 4 to end here. Looks like it's going a little bit deeper, but I mean, it's getting really close to this wave 1 high. Goes just a little bit below it. It's game over for that as well. We look at the total market cap. I can see that's dropping as well. The total market cap, I do think, was put up here at 1.82 trillion, around there. We're down roughly from that height to where we are currently, about 17-18%. So down since the ETFs. That could be, I mean, this is pretty much the same chart as Bitcoin. We got 5 waves down, 3 waves up. Now we anticipate 5 waves down. This is probably going to come down a lot faster if the alts start tanking. Even more so if Bitcoin just starts to drop closer to that 30K level. I mean, we could be back in this parallel channel. And again, parallel channels do tend to break. I wouldn't be surprised if we do break this and we start going back under a $1 trillion market cap. That's something a lot of people probably don't want to hear right now, but we are seeing a lot of selling pressure. We're seeing a lot of supply enter the exchanges. I am very concerned to see what happens here moving forward. This is total too. So this is everything excluding, what is that? Excluding Bitcoin? Yeah. Total 2 is excluding Bitcoin. It looks like it's kind of topped out here. I mean, we're getting a double top at this point, a little bit higher here. I think that there's a good chance that we could be going lower, testing next level support, which is somewhere around $672.88 billion or so. But you see how this one reacts. If we get down here, then it's probably, the height of this market for alts is pretty much done. That includes Ethereum. This chart, same exact thing, no difference. I think that the alt market is going to react to whatever Bitcoin does at this point, even though dominance has been, extremely low compared to where it was back in December. I mean, even before the ETF got approved, down as soon as, look at this, the ETF got approved January 11th, and look at where dominance peaked after rallying significantly. Right there is the 10th, 11th. Everyone just flooded right into alts from Bitcoin. Couldn't be more of a sign that it was a sell the news event. So you can see that there's just a lot of money moving right now in the crypto market. I don't necessarily think that it's going to be moving into. I think it's more out of. We're seeing the outflows significantly for these ETFs. And even if we look at some of these ETFs, they're tracking Bitcoin's price fairly well now. But here, that's kind of the problem, right? It's tracking Bitcoin's price now on the way down, which isn't what a lot of people kind of hoped when they thought of these ETFs. I mean, this is IBIT, this is BlackRock. They were saying that they're going to deploy $4 billion worth of capital in Q1. Well, clearly not doing it just yet. If we look at ARK, now it's under $40 a share. It's down. I mean, some of these, I really wonder how many of these are going to be worth having, or how many stock splits are going to come in the year to come, because there's going to be a point where Bitcoin is just trading at levels closer to the FTX bottom. If everything works out the way we're expecting, the technicals line up with the macro, and well, they got to keep people engaged, right? So a stock split just to prop up the price, make people think that, oh no, maybe I should buy into this. For some reason, people think expensive is like the perfect time to buy. Clearly 49K, a lot of people are buying then. They're not buying on the way down. Some people still are buying on the way down, but I think they're catching a falling knife, especially if that trend breaks. That's not necessarily the time you want to be DCing into Bitcoin, probably. And again, not financial advice whatsoever, but I do think that if you are going to DCA and we're looking at an ABC structure, there's still a lot more downward pressure coming, and a lot more room to the downside that you could be potentially, I probably would be DCAing a lot lower. So just something across the alt market, crypto. I think that there is definitely things to be concerned about with the alts, and just watching if we get a bounce. And if we do get a Bitcoin bounce and alts don't bounce with it, and then Bitcoin dumps after, then GG in the chat. I don't think we're going to be seeing alt season, or even that, or if we do, not great.
Not great. Okay.
Not great. Nope. Perfect way to end it.
Perfect way to end. That's going to wrap it for today. Appreciate you being with us. Keep an eye on earnings after the close of markets here in the next half an hour. Can be very, be focused on that, what's happening with Netflix, all that good stuff. We'll be covering that throughout the week. The latest economic data is going to be coming out as well. So stay tuned for more episodes of Money Never Sleeps. If you haven't yet, hit that like button, subscribe to the channel, drop a comment in there. Thank you, everybody, for watching. Have a great rest of your week. Stay safe out there, and we'll see you next time.
Take care, everyone.